So today we are going to be talking about public budgeting systems, and specifically we're going to be talking about revenue sources. I think it's important to note as you go through the mini lectures each week that this is not meant to be a comprehensive, detailed review. However, the things that we talk about are some of the things I'd like you to focus on as you go through the readings and think about how they're going to apply to your overall project. So, with that being said, welcome to today's mini lecture on public budgeting. We're going to be diving into the most crucial aspect of public finance, revenue sources. We'll break down a couple key concepts from chapter 5 and 6, specifically talking about public budgeting systems by Lee, Johnson, and Joyce. In chapter 5, budgeting for revenue, or public budgeting, relies on various revenue sources to fund essential services. Think about this. When I talk about essential services, police, fire, emergency services are pretty much 99% tax funded. Very few fees. Fire agencies have some, but very few fees go into providing support for the payroll for public safety. So we explore three primary revenue streams: income taxes, payroll taxes, and property taxes. These taxes align with two fundamental principles. The first is the ability to pay principle, where individuals contribute on their financial capacity. The second, the benefit principle, where taxes relate to the benefits received from the public. Taxation also influences behavior, affecting decisions about work, consumption, and investment. So now let's take a minute and explore each of these in just a little bit more detail. Income taxes, both personal and corporate, are crucial revenue sources at the federal and state level. These taxes are generally progressive, meaning those who earn more pay a higher percentage. However, governments must address issues like tax avoidance and tax evasion, which can reduce revenue and create inequities. And I want to think just a little bit about this whole concept of regressive tax. One of the ones that's been in the news lately has been the tax to drive in downtown Manhattan. So think about this. They create a tax that's going to charge you to drive in downtown Manhattan. Now, if you're at the upper end of the scale, the Wall Street folks, the professional folks that have a lot of money, relative, versus somebody who comes in who's a service worker or somebody in the lower economic status, they're being charged the same rate, even though the impact is much more diverse between the various incomes. So something to think about as you think about the taxes. However, governments must address issues like tax avoidance, evasion, which can reduce revenue and create inquiries. As I said previously, those are the areas that they're focusing on. I'm sure you can see that through the news. Payroll taxes. Payroll taxes are another major revenue source, primarily funding Social Security and Medicare. Employees and employers share the costs, but these taxes can impact employment decisions and disposable income. Policymakers must carefully consider these effects when adjusting the tax rates. And we're going to talk a little bit later about tax rates. I'll give you an example in a second when we get into the whole idea of property taxes. So property taxes, local governments depend on property taxes to fund essential services like schools, law enforcement, and public infrastructure. However, the valuation process can be contentious. Disparities in assessments and rising tax rates often lead to public opposition and appeals, making property taxation a complex issue. For any of you that are homeowners, you understand that you pay a certain amount of tax on that home based on $100 of assessed value. A small change into your tax rate, for example, where I live, I pay 45 cents per 100 assessed. I have relatively few services in Franklin County. However, they're talking about making an adjustment this year, adding another penny to the tax rate. Well, in my case, adding another penny is going to add an additional $500 to my taxes. So when you think about agencies that are trying to work out what's the tax rate going to look like, they're going to look at the tax rate per assessed value of your property, in some states of your personal property like cars, automobiles, etc. And they're trying to find a balance between the difference between what assessed value is and what the tax rate should be, so that when adjustments come, they are not dramatic and daunting and really impact the homeowner in great percentage changes. I remember in Arlington, the idea was no more than a 5% adjustment, and that would be through a combination of adjustments through the property tax rate, or the cost per hundred assessed, and the valuation of the property, which in many areas has gone up tremendously. So we'll talk more about that in classes, how that sort of comes into play. Transaction-based revenue, think about this. Now, let's think about transaction-based revenue is talked about in Chapter 6, what covers transaction-based resources. So think about these are sales tax, user fees and charges, or an excise tax. These revenue sources are generally easier to administer than income or property tax, but they come with equal concerns, especially the equity concerns, particularly targeting lower income populations. And we talked earlier a little bit about the idea of regressive tax. Virginia has a meal tax, and counties on top of that can add a meal tax. Franklin County, for example, is looking to go from 4% to 6%. Again, depending where you fall on the economic scale, the cost of that dinner or the cost of those meal taxes are going to have different impacts. Same thing with sales tax. So sales tax are divided into two categories. General sales tax, which apply broadly to goods and services, and selective sales tax, which targets specific products. Most commonly, this would be something like alcohol or tobacco. While sales taxes are efficient, they are often regressive, meaning they disproportionately affect lower income individuals. State and local variations further complicate the sales tax policies. Having said that, when you're thinking about putting your budgets together and you're doing that zero-based budget and you're walking through the cost of everything, long term, when you go before a administrative body or an elected body, where do the funds come from, right? And how do those get paid for? That's sort of what we're talking about here. And it varies. I mean, it's really worth your time to look into where the dollars come from in your county, city, town, state. All the budgets will tell you very specifically what every penny on a dollar goes to, and that will help you be a little bit more specific in your strategies moving forward. User fees and charges. Okay, so user fees require individuals to pay for specific public services, such as public transportation, park access, toll roads, things of that nature. This approach follows benefit principle, ensuring that only users of that service bear the cost. However, affordability concerns arise when lower income individuals struggle to access these services. Think about public systems like metro systems or public bus systems and who they impact. Excise tax apply to specific goods such as gasoline, cigarettes, and luxury items. Governments use these taxes for both revenue generation and regulation. For example, to discourage smoking, higher cigarette taxes. The effectiveness of excise tax depends on the demand elasticity, or how much consumption decreases as prices rise. In other words, how much can the market bear before it comes down? So in conclusion, some of the key takeaways for this week: in public budgeting, policymakers must balance three factors: equity, ensuring fairness in taxation across income groups; efficiency, minimizing economic distortions or discrepancies like we talked about earlier; administrative feasibility, keeping tax collection straightforward, and the old KISS, keep it simple methodology. How do you get the taxes. And revenue sources must align with government needs while considering the burden on taxpayers. And that's the balance. No system is perfect, so a balanced approach is essential. So that pretty much wraps up this week's discussion on public budget. We've covered income, payroll, and property taxes, as well as sales tax, user fees, and excise taxes. If you'd like to dive deeper into any of these things, feel free to reach out and let's think about this as we move towards our live session for this week. Thank you very much.